Hi, good afternoon. Gary Shapiro, Southwest Financial Center. This afternoon, I wanted to get to part two on the proposed tax plan, President Donald Trump's tax plan, and look at some of the specific details. I think the first part of this, since it may get to be a bit long, I'll deal with personal, individual type taxes and then look at some of the other corporate and estate issues. So the first matter is dealing with the tax brackets. Currently, we have a 7 tax bracket system, progressive tax bracket. They want to reduce that to 3. And that's in their so-called simplification, along with a lot of other things. Right now, the top tax bracket is 39.6% to pay income taxes. They propose to drop that to 33%. And taxing income above 225,000. Anybody earning over 225,000 will be taxed at 33% instead of 39.6. And of course, it weight progresses above that. So it's kind of a regressive form instead of for instance, those that earn over 5 million or 25 million to pay the top bracket. We used to be up to 80% in tax brackets at one point. So that's going to be a bit of a hard sell, but so be it. I mean, it doesn't take that much to go into a bracket schedule and figure out whether or not you're paying one of or a combination of 7 brackets as opposed to 3, but so be it. That's their proposal. Schedule A itemized deductions. They want to eliminate just about everything except for mortgage interest and charitable contributions. And they're going to cap charitable contributions as well. It's definitely going to be a hard sell, especially for those living in non-income taxing states where those residents, such as Nevada or Wyoming or Alaska or Florida, get deductions for sales taxes paid based on their income or some specific items that they pay high taxes for. They propose to double the standard deduction for everybody, whether single or married. And they're kind of alluding to, and I'll throw that out a little bit later, eliminating personal exemptions. So again, that's dealing with their overall simplification premise. They also want to eliminate the alternative minimum tax. And if anybody saw the release of 1 year of Donald Trump's tax returns, saw that a substantial amount of the taxes paid that year for him was the alternative minimum tax. And the AMT, that deals with certain people being able to take certain what they call tax preference item deductions, accelerated depletion and things of that nature, and reconstruct where those wouldn't be the case, and always having then to consistently pay at least some taxes. That's going to be a very hard sell, as is their proposal to eliminate the estate tax deduction. Right now, there's a bracket of some 5,450,000 or so, up to where you don't pay any estate tax, and those that have that type. So we're only talking about the top 1% that actually contributes or pays towards the estate tax. So being that it's one of those do as I say, don't do as I do type of premises, where the president himself, his real estate holdings then at that point, where it would go to the sons and Ivanka, where no taxes at all will go to the Treasury. That's going to be a very, very hard sell as well. Let's take a look at a couple of the other things. During the campaign itself, and it hasn't been detailed yet because it was a one-page summary sheet that was presented so far, they also proposed to eliminate the marriage tax penalty. Well, that pretty much, I would say to the degree of 95%, has been already eliminated. So I think that was just a lot of, campaign verbiage because, of course, it sounds bad. They want to propose to eliminate the head of household status. So, single parents, single woman with children, there's going to be a very hard sell because head of household is the lowest tax rates. It's the same tax rate basically as those that are married compared with being single. So eliminating that plus the deduction is a jump higher than that for the standard deduction than for singles. That's going to be a tough one as well. And or eliminating personal exemption. So eliminating personal exemption. So those that have 3 children, 4 children, 2 children, you're allowed a deduction for 4,050 each, or 4,100, or by the next year $4,200 for each person listed on a tax return. In addition to your standard deduction, that's going to be a tough hill to climb as well. And the last item I want to talk about before going into corporate, dependent care savings accounts. They're talking about up to $2,000, sort of similar to an IRA that some will consent to. It's kind of like the Coverdale educational type of IRA that was proposed. You're going to try to make it easier and just call it something a little easier for focus or easy selling. So that's it on the personal side. We'll deal with some child and dependent care issues as well as the corporate. Part 2. Take care.